Hello friends, a very warm welcome to my channel. In this video, we are going to do the analysis of a pharma company called Natco Pharma. This is an old company mainly into making generic formulations, and it exports this into countries like US, Europe and rest of the world. Before we begin, if you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer. This is not a stock recommendation. These are stocks picked up by the audience in the Telegram channel. I am a SEBI Registered Research Analyst, and I or my clients may have positions in the stock, and I may change my view on the stock based on the quarterly numbers or any developments on the company going forward. This is a crisp video, not a full-fledged analysis, so I'll be covering only the important points in this video. This will be the flow of our discussion. We'll talk about the business model of Natco Pharma in brief. We'll look at the stock performance in the last 5 to 10 years. We'll see the financial performance of the last 5 years. We'll discuss why the stock has corrected sharply in the last 1 month. We'll look at the valuations, we'll talk about the outlook of the management going forward, we'll look at the valuations, we'll talk about the risks of investing in this business, and then we'll form an overall view on the stock. So Natco Pharma is a vertically integrated R&D driven pharma company. They spend about 8 to 10% of their revenue in research and development. They focus on complex products in very niche therapeutic areas like oncology and others. They make formulations, APIs, and also generate some revenue from the contract manufacturing, which is CMO or CDMO activities, but majority of their revenue, close to about 75 to 80%, comes for the generic formulations business, and a lot of this products gets exported to US and Europe. When it comes to formulations, they make generic formulations and not branded formulations, and they keep applying for ANDAs, DMFs for various products in different countries, and as and when they get approvals, they manufacture those products. So it's a fairly simple business, but different molecules which they make, what is the size of the molecule, what is the market size, who are the competitors, all those things needs to be closely tracked. Recently they forayed into a crop sciences business, so far which has not proven to be a very good decision as it is still into losses. Next year the company hopes that this business gets breaking. The company is open to doing acquisitions as they have a good amount of cash on their balance sheet, and they often collaborate with different companies for their business. If you look at the Q3 breakup, 44% of the revenue comes from export formulations, from domestic comes about 15%. So about 60% comes from the formulations business. From the crop sciences comes about 2%, and APIs contribute about 10% of the business, and the rest of the businesses contribute 30%. If you look at the last year FY24, close to 78% was from export formulations. Domestic was close to 9%, so almost 85 to 90% was from formulations business. And the rest of the three, that is crop sciences, APIs and others, contributed a minor share of revenue. When you look at the long-term chart of this company, it's a highly cyclical business, and it is taking a strong support in the zone of 500 rupees. So after making the recent highs above 1500, the stock has sharply corrected to almost half, which is 800 zone, because the results in Q3 were very bad. In 2023, the company has done a buyback, and going forward, as the company is rich in cash, they may consider to do a buyback or distribute some amount as dividends. In the last 5 years, the revenue has grown pretty well. They did about 2000 crores of revenue in FY21-22, which was in the similar zone for the last 4-5 years, and that increased to almost 4200 crores in the trailing 12 months. But we should remember that Natco Pharma's business is a lumpy business, and this revenue of 4000 crores, there are not good amount of molecules in the pipeline, or they don't get approvals for large molecules. This revenue may fall back to the earlier levels of 2000 as well. So that's the nature of business of this company. Margins of this company are highly volatile. They did a profit of about 600 crores in FY20, which dropped sharply to 264 crores in FY22. So this is less than half. Then this tripled to almost 900 crores in FY23, and now in the trailing 12 months, they have done an EBITDA of almost 2100 crores. So you see high volatility in the profits of the. A similar movement you will see in the margins. The margins were 30% in FY21, which fell to just 14%, and now they have done an EBITDA margin of close to 50%. So there's lumpiness in the business. The margins are volatile, which makes their business highly unpredictable, and the same is accepted by the management in the call as well. So in the recent Q3 quarter, the numbers were bad because primarily because of the two reasons. One thing, that they had limited allocation to their main product, which is Revlimid, and the revenue from that had been already absorbed by the company up to September of this year. So that's why in Q3, the revenue portion from that product was less, and the revenue was down. At the same time, the R&D expenses were more. That led to compression in the profits. There's a good chunk of money coming from the other income, which includes interest income as well as some capital gains from the sale of land. And roughly about 3000 crores is the cash which the company has right now. And the company expects to do the same 1800 to 2000 crores of profit in FY26 as well. And this cash may swell to almost 5000 crores in the next 1 to 2 years. So this makes this company cash rich and has an option to distribute a portion of this money to shareholders and also to use a portion of this money for some acquisitions for growth. The dividend yield is about 1%, so it's a dividend paying company, return ratios are good. The promoters holding is just about 50% and the debtors are pretty high. This again would be because of the lumpiness in the business. In any particular 1 or 2 months, if the sales are high, the debtors may swell and get normalized in the coming months. And in the trailing 12 months, they have an other income of about 330 crores. So this you should consider while calculating the valuation. So what led to the fall in the stock price? If it is such a cash rich company, has shown very good growth in the last 3-4 years. So the market sentiment has been weak. That is one of the reasons. But the main reason is the Q3 performance was very bad. It was unexpected. On top of it, the management didn't give much clarity in their Q3 earnings call. There are a lot of questions which remained unanswered by the management, which spoiled the sentiment of the stock. And they have said that they will do a similar profit which they did in FY25 and FY26 as well. And for FY27, they don't have visibility of growth as of now. So they have a lot of products in the pipeline. The management itself says that our business is highly unpredictable. So because of these kind of discussions in the earnings call, we witnessed a sharp sell-off in the stock price recently. So before we move forward, if you are not a part of a Telegram channel, you can join today by clicking the link in the description button. Every day morning, I share my views on the market. I share portfolio allocation strategies which will help you increase your returns. More than 7,000 people are in touch with me daily on my Telegram channel. So these are the several molecules which are in the pipeline. We'll not get into the technical part because each molecule has different therapeutic areas. Each molecule has different sizes of the markets and the timelines for getting approvals of these molecules are unknown, and as and when they get approved, the company will manufacture them and supply to various countries abroad. But broadly, you can understand that there are sufficient products which are in the pipeline, and about 5 to 10 of these products will get approved in FY26, and gradually the manufacturing of these products will also be contributing to the revenues of the company. What is the growth outlook of the management going forward? They filed an ANDA recently for a generic drug called Disdiplam. They are not ready to give any specific numbers guidance for FY25 or 26. They are spending about 8 to 10% of their revenue in the research and development, which is the good part. In FY25 and 26, they intend to do a profit of about 1800 to 2000 crores, which is a very good number. The crop sciences business, which is presently in loss, will do a revenue of about 130 to 150 crores in the next year, and it will start doing break even. In their oncology portfolio, they expect some approvals in the coming year. Altogether, about 7-8 approvals are expected next year. They have enough cash and they may consider an inorganic acquisition to grow. The management says that their business is very peculiar, where they target very niche molecules which are like jackpots, and if they get approvals for them, then suddenly there will be a spurt in the revenue in the business of the company, and if they get delayed, there could be a long slowdown in the business of the company. Now, valuations for this company are to be looked at a very different perspective. On face of it, they appear very cheap, but being a cyclical business, being a lumpy, unpredictable business, you cannot value this business on a price to earnings multiple, as there are high fluctuations in the profits of the company. Market cap to sales is also not the perfect metric, as we have seen a drastic drop in revenue in Q3 FY25 itself. So a combination of technical analysis as well as a price to book ratio could be one way of looking at the valuations of this company. There could be other ways like discounted cash flows, etc., but those get too complicated. We are talking about one way or one simple way of looking at it. So technically, we have seen that the stock takes very strong support in the 500 zone. And from then onwards, as the results improve, the stock makes a U-turn and makes a new high. So this has happened already 3 times, and it is highly likely that it may happen again. But the timeline of when it happens is very unknown. So this is kind of stock is for very patient investors who are ready to hold for 3 to 5 years without any returns. In terms of price to book, historically, whenever the stock is coming to the price to book of about 2 times, it is taking support, is kind of maintaining that valuation. So that is one area where we are getting comfort in terms of valuation as well. Now, what are the risks of investing in this business? It's a lumpy business. The revenues are unpredictable. There are a lot of legal issues going on with different companies for different molecules. It could be a highly cyclical business. There are a lot of approvals required for this business. They keep filing for those approvals in different countries. There may be delays, rejections in those approvals. For US FDA, there could be different audits happening, EU GMP audits happening. They may get warning letters for them. There are certain molecules which become flagship in a particular year, and majority of the revenue gets concentrated on that molecule. There is competition from the older molecules which the company makes, and any geopolitical changes in Europe or US can drastically impact the business of this company. So now that you've understood the business model of Natco Pharma, you've understood the valuations, you've understood the growth prospects, the risks of investing, what is an overall view on the stock? If you're holding the stock and you have not managed to sell at the top, then from here the downside looks limited, as the stock has major support at somewhere around 500 zone historically. So you may continue to hold and wait for the company to do well, but the time frame for holding could be long. And if you're a new investor looking at investing in this company, first you should understand whatever the points we have discussed in the video, that this is a lumpy business. The revenues and profits are highly unpredictable and it may take a very long time to recover and get back to normal. So if that kind of investing, taking contra bets and waiting for a long period of time suits you, then you should consider these kind of companies for investing. If you want a steady growing business which grows every year at 20%, then you should look for other businesses. And if you once decided that you're investing in this company, then you should accumulate gradually, as this may remain range bound for a very long period of time. So that's a different way to approach this company, unlike others. So that's about Natco Pharma. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names of the stocks in the comment section. Even this we have picked it from the last video. Do join our Telegram channel by clicking the link in the description button. Thank you for watching and have a wonderful day.